Good morning. It's Renae Anderson here, and it's Mortgage Monday. Today I'm here with Jeff Lancaster with W.J. Bradley, and we are talking about closing costs. Jeff, can you explain why I put the quotations around closing costs?
Yeah, closing costs are just one piece of what the borrower brings to the table on the day of closing.
Okay.
They will also bring their down payment and also pay for prepaids and reserves. And those three pieces together encompass the total settlement charges, which is the final number on the day of closing.
Okay, so I just want to point out that Jeff says the word settlement charges is really what we consider as buyers to be the closing costs. Okay, so can you explain down payment to us?
Sure. Down payment is going to vary based on a borrower's qualifications, but more importantly on the loan program that they're using. VA loans, as we've talked about before, offer as little as 0% down. FHA insured loans offer as little as 3.5% down. And then conventional loans, the down payment can go anywhere from 5% up to 20% or more.
So closing costs. Now this is the word that we all thought was settlement charges, but it's just a piece of it.
Correct.
Is the difference between what is closing costs?
The closing costs are the actual fees that a borrower is going to pay to acquire a loan.
Okay.
And those are fees paid directly to the lender, fees paid to the title company, and then fees paid to third parties.
Okay.
Examples of third parties might be the appraisal company, because every lender is going to require an appraisal on the property.
Right.
Texas is a survey state, so that would include a survey company,
Okay.
as well as county clerk for recording.
And is there an estimated charge that you found or percentage that would be those
Yeah,
closing
and it's
costs?
not a percentage. When I send estimates to my borrowers, my typical closing cost number, and again, that's fees to the lender, the title company, and all third parties, comes up to $3,165.
Okay.
And that number is before any credits from the seller that may be negotiated into the contract,
Right.
as well as any credits from the lender.
Okay. And that's an estimated number?
Correct. Yeah, that will vary based on the lender, based on the title company, and based on the third parties that are involved, because everyone sets their own fee structure. But I found that the gross number of $3,165 has been pretty accurate for me.
Awesome. Let's talk about prepaid and reserves. Can you explain those
Sure.
to us?
The first part of that, prepaids, a couple different items. Number one is your prepaid interest on the loan. So for example, if you're going to close your loan on August 15th, then you would owe interest from August 15th through the end of the month. So you would pay 16 days worth of prepaid interest.
Gotcha.
The other prepaid item is your homeowner's insurance. If your insurance company tells us that your policy premium is $1,200 a year, then we're going to collect the first year's premium up front of $1,200, and we're going to prepay that directly to the insurance company so that your house is insured from the day of closing for the first year's policy.
Okay. And what about the reserves? Is that part of the same?
And it's a part of the same thing. The reserve portion, typically we're going to collect a net number from the buyer, 3 months worth of per diems for the homeowner's insurance, as well as 3 months per diem of the property taxes in order to establish the borrower's escrow account.
Oh, okay. So does the escrow account pay for the life of the loan if you want it to, or is it just for those first 3 months and year for tax?
It's year over year. So going back to the insurance, the first year's insurance is paid in full the day of closing. So when you start making your mortgage payments, assuming you have an escrow account with your loan, 1/12 of your insurance and 1/12 of your annual property tax bill is a part of your total mortgage payment.
Okay.
So each month when you make your payment, your lender is setting aside that escrow portion into your escrow account so that when the insurance renews a year later, they pay the escrow, or they pay the renewal for you out of your escrow account.
Oh,
And when
okay.
taxes come due, they pay the tax bill for you out of your escrow account, which you've been replenishing each month when you make your monthly mortgage payment. So you're building, and essentially when an escrow account is involved, you're always ahead on your insurance and on your taxes.
Awesome. Thank you so much for all
Sure.
that information. Okay, so let's do our quick mortgage update. Anything new on the interest rates this week?
Rates are fairly steady. Again, FHA and VA 30-year fixed 3.875 and conforming conventional 4.375.
Okay, great. And is there anything new that we need to know about the mortgage industry this week?
No new developments. Everything is holding pretty steady.
Great. Thank you so much,
You're
Jeff,
welcome.
for being here. And we will see you next time. Thanks. Bye.